Ladies and gentlemen of the crypto space, we're live on a Thursday, December 28th at 4:45 p.m. A little late in the day. Can't promise that I'll get to something tomorrow, so I wanted to get something out today. This is a hot topic and it's very important to talk about today. Coming off the heels of a lot of volatility and positive price action this week, and clarification, education, information is needed to cut through the noise. One of the most important things that people need to understand is the concept of adoption. There is little to no adoption of anything in crypto markets. Probably the most interesting thing with regard to adoption is immutable and the gaming that occurs and their cash flow, which is basically zero compared to Blizzard and other peers. When you hear about some sort of central bank doing CBDC testing, that's not adoption. With regard to financial products and services, you're talking about cash flow, you're talking about profits, and you're talking about settlement. That's adoption. People using it to walk into a store to service a payment, to buy something, to walk out. That's adoption. There is no adoption. People people agreeing that one blockchain is better than another, as you see in price action, that certainly isn't adoption. There's little to no adoption. I can't stand posts that say the FOMO is going to be real, the price is going up, the generational wealth. It's such bullshit and hyperbole. And it's malicious in many regards, not even necessarily intentionally malicious, but indirectly. Intentionally being they own a large position, they're shilling it, and then they have a capacity to use you as legs of liquidity. That's malicious, but not malicious is just someone that is not critical with their understanding of these systems and these businesses, and they're just carrying on as other people would, as the people in the space try and support a project. There's no honor. There's no such thing as honor in supporting a project. If a project is good, it supports itself. Community. A project has to have a useful utility, a functionality, a significance to this thing we call humanity. And those projects will do well. And I've said very clearly that there's very few products. Clearly gaming and data storage and state metadata, that's very meaningful. Financial primitives, what does that terminology mean? A money. Uh, that's very loaded conversation. And I think that is something everything needs to be taken from the perspective and must it is shit. It is a shit coin until proven otherwise. And that's kind of the title of the stream and how to differentiate these things. Now, clearly, for a long period of Bitcoin's history, it was a shitcoin with regard to public perception, consumption, and the community in regards. It has taken a long time to start to establish conditions or attributes, not just speculative. But look how many use cases there are for settlement. You have El Salvador and small swaths of storefronts and retail in countries worldwide. It's marginal. That's an important thing to note. Change starts at the margins. So that's why I would say probably within the last couple of years, the last 4 years, Bitcoin has established characteristics, started to establish characteristics associated with a money. Why? All right, every FX pair has volatility, and it happens to be that it has had massive volatility over the years. So it has volatility, great. It has a price point that doesn't go to zero, so there are buyers at some point. So it has the cyclicality to it, and everything in financials need to have cyclicality. They need to survive these periods of inflows, capital inflow and outflow. And now it's starting more and more to have a capacity to be used in settlement. Now, what's aiding that capacity is is liquidity, being able to relatively instantly convert it to a settlement currency. So that's meaningful. So that's why Bitcoin is the core of a lot of the conversations that are important. Ethereum has these characteristics. Why? Because it has survived. It has survived several cycles, and therefore, it did not go to zero. It lost a lot of value, but that basically means it belongs in the FX category, and you have to treat it as a very volatile currency pair. It's instantly convertible to a settlement currency, so you can settle transactions with it in stores, in retail stores, and that's meaningful. Now, obviously, it has other characteristics. The network and its native yield drives behavior in the system. With regard to the smart contracts, they have facilitated enterprise formation, fintech enterprise formation, credit, FX markets, and derivatives. That's it. That's all it is, over and over again. Every time you hear a new L1 pop up that has better properties, something that's better, literally, this has been L1 ICO season for folks that remember 2016 and 2017. There's so many L1s. What's the point? And what does it take to be a meaningful L1 with regard to censorship resistance and decentralization and those characteristics? And even Ethereum is criticized as compared to Bitcoin. And every L1 you're dealing with is most likely some sort of proof of stake chain. So folks are really fishing for narratives that drive capital flows, drive people speculating on price action, and this is what hurts people the most with regard to capital management, portfolio management, and ultimately investing, because it's the new hot thing, the new shiny thing, and you don't need to do that. If you've been here for the last 10 years, things come and go, and what matters are the things that stick. And it's been different since 2020 because the things that stick aren't just the concept, the base layer concept of a blockchain, and that's just so base layer. And I don't give a shit about the concept of adoption of a blockchain that is best represented by surviving and being established cycle over cycle and being used, and that's how you differentiate between a shitcoin and fintech. Now, maybe it's just extremely right curve of me to think that the enterprises that were established between 2020 and 2024 have much more strength and significance as compared to anything possible that could be new today. That's just the concept of lindiness and in action. Things that exist for a period of time have a greater likelihood to continue existing into the future. And this plays into the concept of risk tolerance, being early from a VC investment perspective. Yes, you get your max returns, but you also have your max risk. And that's not necessarily the thing most people should be doing. This is exactly why there's rules regarding, accredited investor rules, to have a degree of competence before allocating capital to max risk type of things that are traditionally, constrained to venture capital. When you're buying an L1, when you're buying some shit on some chain, literally it's venture capital. And half the time it's horrible venture capital because it's tokenomics that are destined for death. It's products that exist 10 times over. It's inferior products compared to something that's more entrenched, something that's more established. So, sure, it's always interesting to fight for the underdog, but the underdog is often a losing battle, especially when it comes to, corporate and companies and money. Strongest survive. That's a very Darwin type of thing to understand. So something new coming along very rarely ever disrupts the status quo. But when it does, it's a big deal. So that's the whole point with regard to venture capital, to hope something new could disrupt the status quo, and you got a unicorn on your hands, but that's like 0.1% of everything. So you see all this exuberance in these markets and social media of people just throwing capital around, and you see these massive retracements, and it's just people need to have more of a rigorous methodology in deploying capital. Anyway, I hope that helps. I'm just trying to give people a little bit of capacity to navigate these markets, especially because Monday we were bearish, Tuesday we were bullish, and then Wednesday we were bearish, and now it's Thursday, and it's the second day coming off the heels of a fair amount of retrace, 10, 15, 20% on a lot of shit. A lot of things are still down big. I mean, 6% is big numbers. I mean, this is just look at this on the 3 month. It's a brand new asset, and people are just piling in. It's crazy sauce. Meanwhile, curve's at 68 cents, up 2%. Very nice. Nice to see. I hope that helps clarify some things. 10 people in this late stream on a Thursday. David, good morning. Any thoughts on adoption around DSOC? Have you seen this area of potential interest in 2024? I have no idea what it is. Is it new? Is it a blockchain? What is a DSOC? Is it a protocol? Is it a ticker? Is it a business? Is it a blockchain? So these are important things to understand. Adoption. It kind of started the entire stream, kind of hitting that topic very specifically. There is basically no adoption in these markets. It's imperative to not only understand that, but to accept that, and also understand the extraordinary opportunity that exists in these markets because of the few things that have been adopted. Now, bear in mind, with regard to real-world adoption versus crypto space adoption is meaningful because there's adoption in these crypto markets with regard to credit consumption, with regard to FX markets and exchanges, AMMs, and obviously derivatives that are widely consumed. In that regard, you have to inspect on-chain stablecoins to assess how much capital is available in these markets for those types of businesses to capitalize. Decentralized social media. It's a big idea, but you're talking about disrupting legacy social media. I think there's much more of an opportunity for legacy social media to just jump into some sort of decentralized implementation than it is for some sort of new decentralized implementation to disrupt legacy social media. I think that makes sense. There's just so much entrenchment. In many regards, X is like a media outlet. That's just my general high-level sentiment on the topic. Paul, good evening. Much a pleasure. For the 12 folks that are on stream, please feel welcome to throw anything you have on your mind in comments. You will obviously know we get to all comments. I'll flip through the charts. In the meantime, everything is still at a premium, which is not a bad thing. So these 1.5, 2%, 3% depreciation on Ethereum after breaking 2,400 to the upside is not something that is disappointing, to say the least. It just is people liquidating. It's a minority stake being liquidated. It's not like it's a disruption of trend. Clearly, it has nothing to do with invalidation of narrative. So to me, this type of directionality is quite clear, especially considering 2017, where we were entirely rejected by the monthly TWAP. Notice that. Complete rejection of the monthly TWAP, but here we're just completely overextended from the monthly TWAP. So this is much more akin to breakout somewhere around end of, is it October 2020? Wow. How do you like them apples? All right, so this is very different chart structure as compared to the most previous cycle. If we zoom into the weekly, we could get a little bit more ground, or back here. Different time. So that it's not just a different time with regard to the market, it's a different time with regard to the technicals. It's just literally a breakout of the time weighted average price. Support, 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 support the entire way up. It was only in 2020 that it was rejected to the downside. Isn't that wild? So that's where we are. But look how much of a premium is in the market right now. That's quite extraordinary. And it's more for Bitcoin. Bitcoin is much more extended than Ethereum, obviously, as we've seen with the Ethereum BTC chart. Frax is doing very well above $9, well above the time-weighted average price. Breakout, and not just hold, but making a move further upward. 3 days left in the month. From a candle standpoint, what you want to see is 1, 2, 3 candles supporting a directionality. Plus, literally since 2021, it's higher lows. I don't give a shit about divergence to the upside. It's just, this is the insanity that literally we were discussing this stream on how to peer through this bullshit. This is what counts. This is the region that counts. Where's a rectangle? This is it. This is the region that counts. This price actually means nothing. And obviously there's a significant amount of volatility if you're considering $14 down to $2. But look, $1.50, $4, $5, time-weighted average price. And now we actually have the start of what looks to be a structured product from a price action standpoint. That's very comforting, technically. Dot, same thing. Much less talk of the network of networks and social media, but technically, look at what it's doing from a monthly time-weighted average price standpoint. So these are the things that are meaningful. Atom is actually in a very interesting structural position if you put on the logarithmic chart. It looks very, very good. It didn't break to the upside yet with the emissions reduction that was recently voted on. So there should be much less supply as compared to months, years past. It's a few short years. So all of this is leading towards the type of irrational exuberance that occurred with Solana. It's irrational exuberance. Now, notably, it's a return to the mean from the downside. It was oversold to the downside. It's a return to the mean, and now it's at a premium. Do I expect a return to the mean? Not necessarily. I think we're pending geopolitical complexity for a full return to the mean. But I think this is where we get to fib retrace levels, 0.382. So this is a nice congestion region. 50s, high 40s, 50s. So that would be, if we continue to see appreciative directionality, that would be an optimal price point for acquisition, and then it keeps going. And notice how it keeps going. You're closer to the time-weighted average price, and maybe by Q3, Q4 2024, the time-weighted average price gets up to the 50s and 60s. So you're literally buying at a future average price. So these are reasonable numbers. And that's not talking about like insane exuberance of folks talking about 2,000, 3,000 at the highs, and then it retraces to 50, 60, 70, where the average price is. Everyone's looking at these average prices. That's why the average prices are meaningful, because everyone knows what they are. Everyone sees them. 3-month in crypto markets is not really something looked at often, but it's really the 1 month that'll give you a good sense of where things are heading. Same thing applies, though, with regard to the 3-month, whether you're buying at a premium or you're buying at a discount or you're getting a discount. For something like censorship-resistant decentralized social media, how will the posting of illegal content be mitigated? Seems like a legal nightmare. Yeah, I don't have answers for that. Disturbing topic, to say the least. Freedom versus morals. I don't know. I think a maximalist, a freedom maximalist, like a true libertarian, would argue that's for law enforcement. How all this will play out, I don't know. That's a great complexity, and I appreciate that complexity. Diego, hola, buena tarde. ¿Qué horas son? ¿Cinco? Okay. Tengo hambre. Voy a comer. Un ratito. What a surprise. About to go to sleep. Yeah, DeFi futures. Little afternoon, evening action. Great fun for Prisma. Prisma coming back to about an average price point, about $1. It's about average. Looks right down the pipe to me. Very interesting because this is total prisoner's dilemma. The only exit liquidity is CVX Prisma, and you're literally taking like 50%. I think it's like 75% haircuts because no, you get 100% claim if you claim as CVX Prisma, but then you get you have the slippage. Oh my goodness. All right, fine. It's not 50%, but it's still a 25% haircut. I don't know. I personally wouldn't I wouldn't be liquidating. I think the prisoner's dilemma that they constructed is very interesting, and I think the emissions are going to start dropping soon. And I think this is an interesting protocol. We'll see how it plays out. Watch those position sizes as always. Great pump for Prisma. The Stacks chain has a wait time of 3 days. I've been following Stacks and Alex, obviously. Let's go to the monthly. Okay. You could always argue that buying here and it goes to $20, you made capital gains. First off, you would have to sell it at those $20, and most people don't sell it. Don't buy at a premium. The two things to establish if something is systemic, if it's significant, it will survive, and then you buy at a discount. Those are the two criteria for taking positions. Buy at a discount something that's going to survive into the future. So that's why I talk about immutability so much. It's going to exist into the future, whether anyone likes it or not, because that's software, and that's what the word immutable means, and that's what the software represents. So that's why it's such a big deal to me. Will it exist in the future? Likely? Less likely? Barely a chance? Put a number on it if you have to. And is it at a premium or a discount relative to the average price? Shit's at a premium. I think Stacks is interesting. I think there'll be a lot of peers. There's very few peers from a Bitcoin perspective. There's literally only 4. From an investment standpoint, from a Bitcoin app layer, there's really only 2 investment options. It's Stacks and Syscoin. Rootstock doesn't have a token, and Liquid doesn't. I don't even know. That's just a federated network. That's a whole other story. Alex is interesting. It's a heck of a presentation. Nice user interface. Supports, I believe, BRC20s. So that's interesting. It's brand spanking new. It's at a remarkable premium. You have to be able to say you can't buy shit because it's at a premium, which means it's going to go 100 times on the money. At some point, it comes back to the average price. That's why Buffett was Buffett. The man had unlimited patience, has unlimited patience, and you wait until you get a good price. You either get a good price or you don't buy something. That's it. Wait for the good price. That's the strong hand. That's the diamond hand that people really should be talking about. A capacity to just wait and wait and wait for a good price on something that is significant. For instance, on Bitcoin, if you look at the 6-month chart, there has never been a breach of the time-weighted average price on the 6-month chart to the downside. Those are the best prices. And it was very clear, like the bottom in 22 was at 15 and change. It was above the time-weighted average price. It's pretty interesting. It's just a line on a chart, and it gives you a good sense of where things are with regard to premium and discount. Look where we are with regard to Atom on the monthly. Okay, so these are the interesting things. You're at a premium relative to where it was. This was a discount. But these are, all things considered in these types of markets, pre-breakout. They haven't experienced FOMO and that irrationality. Dot at a premium. It's pushed up. Curve, pre-breakout. It's at a premium relative to the lows, but not relative to the average price. It's still mean regressing to the average price. Same with convex, still mean regressing to the average price. Premium on Avalanche. Stargate is finally pushing above the time weighted average price on the monthly. Relatively new asset, so it's still at an interesting level, and this was some nice discounts. So I look forward to this. This is a heck of a protocol. Is this not established at this point for intermarket liquidity flows from a crypto market perspective? Not meat space into the crypto market. That I see Chainlink serving very well for. But this is very crypto market centric. Aura has just been getting hammered left and right. But man, those yields on Aura are still quite impressive. So in that regard, that is a consideration. But if you go to the monthly, do you have anything interesting? It's too new. But even from the weekly perspective, it's at a ridiculous discount. So these are the so if you boil a list, you're looking at all this shit in these markets, you gotta trim the list. You trim it down from 100 to 20 to 10 of the things you think are most established. Of the 10, 20% in the next 5 years aren't there. So that's two. You have 8. 20% by 2030 aren't there. So you have 6 instead of 10. You see what I'm getting at there. 6 remaining into 2030 that survived, and you got them at a discount. Survival, and the price will go up over time. Hope that helps. Tapsy, what's up, y'all? Yeah. Do you believe there will be any impact of calendar year's end on the crypto market? People selling January 1st, gains taxable 2025? Yeah, not really. I think there's equal opportunity to liquidate year's end, but also to liquidate after year's end and defer tax obligations until 2025. So I'm not too fond of year's end rebalancing, especially from a crypto market perspective, because it's not relative to the United States. It's a global market, so you literally have to do an aggregate assessment of all tax jurisdictions worldwide. So no, I don't think it's relevant from a crypto market perspective. Tim, hi Cap, any project you would compare Hero in order to get a sense of potential valuation? Hero's early. Everything on Solana is early. There is nothing established on Solana from an enterprise standpoint. This is all like pre-assessment time period. The only thing that has an established business presence are really things on Ethereum mainnet, where you're talking about Aave with billions of dollars. It's a money market. It's literally where you go to for credit. That's what it offers. It's a business product. It's a fintech company. So with regard to stuff on Solana, the amount of liquidity on Solana is basically zero relative to Ethereum, and the amount of liquidity in Ethereum relative to actual nation states is basically zero. So you got to put this all into perspective. Any capital deployed into such markets is venture capital. It's extremely early. And then even worse, you're fighting the concept of seed rounds. You're literally talking about the venture capital of the venture capital. So you're a venture capitalist being a retail investor in these markets, but they were literally venture capitalists that got in pre-public market availability. So I think it's going to be an interesting 4 years for Solana. I think that it will gain traction. I think the price response thus far is meaningful with regard to the capacity for its on-chain activity to become more established and more significant. But I think that's the case for a lot of chains. I think Cosmos hubs are underappreciated. I mean, look at Celestia, but that's a Cosmos hub. So if any of the Cosmos hubs are successful with regard to receiving significant capital inflow, it will bleed over to all the other Cosmos chains. So that's exactly why we saw osmosis rebound. Osmosis rebounded significantly because where are you going to go to exchange from a Cosmos Hub perspective? To osmosis. So Celestia bleeds over to osmosis. And anything, you got to understand that concept, how these markets interact with one another. They bleed over, and the hot ball of money rotates everywhere. So the same thing, maybe for Polkadot as well, but I think a good way to look at these markets is where they are with regard to appreciation. Arbitrum, Optimism are appreciated because of mainnet, and uh, Avalanche. I think Phantom has a good potential to recuperate a lot of what was lost and be more on a similar level to Avalanche speculatively. But these were the hot chains in 2020 and 2021. I really look forward to Cosmos hubs gaining more appreciation, and I think Polkadot parachains deserve more attention. Whether they get it or not, I don't see it, but I see it for the Cosmos hubs. That's kind of it's the early stage. I think they will be great, more appreciated going forward. I don't know where Bitcoin app layers are with regard to appreciation. I would love to see stuff like Syscoin become more appreciated. It's meaningful to be secured by Bitcoin, and that's why Stacks is hot. But there's literally nothing on the Stacks network. It's, if anything, it's a proto market. It's an earlier state of development than, I don't know, the Cosmos hubs or the Solana ecosystem. It's just a proto market. So it's going to have that insane volatility because people end up realizing there's nothing to do there. Hope that helps. So rank or rate where things are relative to other things. The way to understand these markets is relatively. This market relative to this market tells you something significant. No idea what Riff is. Rootstock. Rootstock doesn't have a token. Rootstock doesn't have a token to my understanding. Now, obviously, Rootstock is an EVM chain secured by Bitcoin, which is very, very interesting. They used to both Rootstock and Syscoin at the time. It was just NEVM, and now it's Rolex. Were integrated into multi-chain briefly in was it 2021, and you could deploy capital cross-chain over to those networks. That was interesting, and it's fully EVM. There's no liquidity over there. There's no volume. There's no market. So it's important to appreciate that. The whole point of this stream is to differentiate between a shitcoin and a fintech company that has a degree of lindiness established because of being cash flow positive, being entrenched with a moat to some degree, being offering a useful product. And there's only a few products: credit, FX, and derivatives. That's all it is. I have no interest in price go up because other people are buying. That drives me nuts. And that's exactly why, over the last years, we've discussed so much the concept of being a dividend investor and structuring on cash flow. Because that is the most comforting for me. The most important thing is to find your comfort zone with the way engaging with these, how you engage with these markets. Token go up in price, hot narrative, FOMO, it's going, generational wealth. You're not going to get any of that following those types of narratives. Igor's in the house. Hello, Noah. Any new thoughts on IPOR? I would love for it to have more attraction, but the problem is it's too right curve. How about that? I think a protocol like it, and maybe it, in the next 10 years can be very significant to be able to hedge interest rates. That's one of the largest derivative sectors in meat space. Interest rate derivatives. It's hundreds of trillions of dollars of notional value. It's very meaningful. but most folks don't really appreciate on-chain interest and the Ethereum denominated risk-free rate. So that's it's gonna take a fair amount of time for it to be appreciated for what it is. It's very early, the concept. Thoughts on convex? You think still in an accumulation phase and discount? Yes. I don't even have to say anything other than show the chart. The chart says it's at a discount. If you think, based on everything you've seen and all the protocols accumulating convex and all the services and function it offers with regard to recycling and as that kind of component of a federated currency issuer, there's a lot of narrative around that I've discussed that I appreciate because it's not something you commonly talk about in meat space enterprise terms. So I find it very interesting. And that combined, well, that establishes to me the systemic importance and the significance of it from an enterprise standpoint. It's meaningful. Chart wise, it's at a discount. It's as simple as that. On the monthly, it's at still a very nice discount. Now, how much does it pay? I think it pays about 19%, 20%. So that is an important calculation with regard to X, Y, Z. How much does it cost? How much is it paying? And how likely is it to continue paying into the future? So we just highlighted some reasons why it's likely to continue paying into the future. Your X and Y calculation might invalidate it with regard to thinking about taking a position. What's 20%? Is that meaningful from a cash flow perspective? It's kind of hard to have a conversation going from the insane exuberance that we had this week of every Solana's up 10,000% on the money, and then coming back to the rational type of conversation of cash flow. So I appreciate you bringing me back to my comfort zone and cash flow. Hey, how do I find hidden gems? I don't find hidden gems. I rarely deploy capital at all. Um, I mean, I just don't. And I don't give a crap if something's up 1,000% or 10,000. It doesn't mean anything with regard to the structure, the hierarchy of these systems. Nothing's disrupting Ethereum. It doesn't work like that. It's not the way nature works, and humans are an extension of nature, and financial systems are an extension of humanity. Therefore, all of it works like that. It's not the way the disruption process works. It's the reason why all the liquidity, all the dollars are on Ethereum mainnet. Not even the L2s. That tells you everything you need to know about where people's trust is, where volume and volatility will be, when conditions call for the volume and volatility. Tells you a lot. So I don't find hidden gems. I don't like new things. The only thing tapioca is an interesting one because of personal conversation. That was early venture capital allocation. But that's not something most people have access to, and that is an unfortunate reality of capital management and trying to capitalize, make money in these markets, or in all markets, just whether it's traditional equities or not. That's the whole right place, right time kind of thing. But it was just conversation and assessment of the astuteness of the developers and communicative capacity and the documentation at the time, and it warranted a modest position size. So that was interesting. I took the convex position in 2023. What was it, 280 we were talking about? So all the topic of conversation we talked about was why I took that position at 280, and now it's at 360. Great. If folks are running around with 1,000% Solana, I'm like, all right, 280, 360. Whew, get that in equities land. Okay. Again, 20% over here. Thank you very much. Answer might be to join Discord. Well, Discord is good. You know what's nice about our Discord? It's been pruned. It's been cleansed over the last 2 years. And what remains are a very astute and concentrated group of people that have been successful in 2020 and 2021, and they were able to successfully navigate 2022 and 2023. They have survived, they have thrived. Capital loss doesn't mean you're not thriving. It's something to navigate, it's something to triumph over, it's something to win against. And the group of people on Discord are literally the distillation of that group. So it's a wonderful foundation heading forward into 2024 and 2025. Very well spoken, very intelligent individuals in there. It's much a pleasure and it's been a privilege to have seen this group coalesce. Yeah, David, I see you wrote that 3 times. Yes, indeed, Discord is very nice. Albeit it is a premium, but you know, modest capital allocation, XYZ style, and you get 20% of the money, and you go, 100 grand on, and you get 20% is 20 grand a year. Okay, so that's the type of calculation that makes all the difference. And I know those are relatively large numbers. It's a complicated topic. I don't have an easy way to dance around the topic from a sensitivity perspective. Quantitatively, it's easy to converse about. If you deploy $10,000 and you're making 20%, you're making $2,000 a year of income. That's meaningful because income. Typically, people work and you get a paycheck, which is income. Except in this instance, you purchase something that's giving you income. Is it a different income? No. It's a goddamn income. Income is income. It's numbers. So I've said over streams over the last years, buy your income. Purchase your income. So that's like the traditional dividend investors methodology. But the problem is in equities land, you're doing that at 2, 3, 4, 5%, and you're getting nowhere. You'll literally get somewhere in 20, 30, 40, 50 years. I think the opportunity in this space is much more interesting. And I still, to this day, with all the exuberance that we've seen so far, I see only a handful of assets that are interesting. And most of them are literally the same shit that we talked about in the depths of the bear market in 2022. Iris has done very well. Very interesting. No cash flow. Anywho, Matic deserves its day. Rejected from trend. The trends are not very meaningful compared to moving averages and levels. But nonetheless, the markets tend to operate structurally. And look, you see the structure right here. Could easily see a retracement down to the time-weighted average price, 85 cents, which is literally a 15% loss of value. And then it bounces up. Unless you're running a validator, it's not a cash flow type of position. But these can be capital gains types of positions. Anywho, I hope that helps. Thursday afternoon, 25 people made it to the end of the stream. I appreciate all of you and the conversation we get to have a couple of times a week. Tell everyone to subscribe. In the link in the description is our Discord community that I told you about earlier. I wish everyone a good week. I'll try and get a stream out tomorrow, but otherwise I'll catch you in the new year. Best wishes to everyone. Take care. Peace.